Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical support and demand area. From here, in fact, all these previous rejections to the upside have been created. So every time that the market tested this zone in the past, created some quite strong rejections to the upside. Again, here the market tested its zone and rejected it. This was the only break below. Again here, tested and rejected, again here, and right now we can see how we just had yet another test of this zone, and the market is currently in the process of rejecting it to the upside. So there is the possibility of seeing more continuation to the upside, as already happened in the past when the market was testing this exact same zone. So let's keep this in mind and drop down on the most recent price action. So if we look at the most recent price action, so essentially what has been happening around this zone, what we can notice is that we have a clear impulse followed by a correction. Now, in general, when you have an impulse and a correction, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And this shows us how essentially we have the 0.618 and 0.786 that are lining up perfectly with this zone, which if we extend it to the left, we can see how it was also the previous support that we have previously identified, from which the previous rejections to the upside started, which creates confluence of support because we have the Fibonacci levels and the horizontal support both lining up in the same area of price. And inside of a confluence of support zone, there is an increased probability of seeing institutional longing. And we will be speaking about institutional longing in just a few minutes. For now, let's keep this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the situation is clear as well. We can notice a massive impulse followed by this correction. Also here, since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which in this case would be from this low here to this high, which will give us a retracement zone, which is in between the 0.382, 50%, and 0.618. And if we extend this to the left, we can see that this is also exactly the zone from which the previous move to the downside started. So again, a previous resistance turned support zone, which with the Fibonacci levels creates a confluence of support zone from which there is a possibility of seeing the continuation of the uptrend. So essentially, the creation of this impulse correction and impulse pattern to the upside. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, the situation is at the moment quite clear. We had first the creation of this M pattern. The market went and completed the M pattern at the neckline. Then we had the creation of this W formation. The market went and completed the W formation at the neckline. And now we are currently testing this zone, which is support, but it's also confluence of support. And instead of a confluence of support area, as we have already identified on the monthly and weekly timeframes, there is an increased probability of seeing institutional longing, which at that point could further increase the probabilities of a potential rejection higher away from this zone. So let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing. Now, if we look at the data for the euro, the first thing that we have to keep in mind is that we are already looking at EURUSD because all currencies on the spot are traded against the USD. And if we look at the data for the EURUSD, we can see how with the last reports, net positions have been massively increased. We went from having a negative net positioning of minus 9.5k net positions with more shorts than longs, 173.8k shorts compared to 164k longs. So more shorts than longs from an institutional perspective to now having a massively positive and bullish net positioning with 100K net positions and way more longs than shorts, essentially double the longs compared to the shorts with 215,000K longs compared to only 115K shorts from an institutional perspective on Euro USD. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. So from a technical perspective, this is already a confluence of support. Institutions are already increasing their net positions. So this increases the probabilities that from here, we could see a potential push higher. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside and rejecting the confluence of support zone. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program, the trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.